Good morning, everyone. I'm Laura Pring. I'm a partner with the executive search firm Pring & Associates, and happy to be here and sponsoring EnerCom once again. I want to say congratulations to the EnerCom team. It is my honor this morning to introduce our next presenting company, GeoPark. They are a leading independent Latin American oil and gas explorer, operator, and consolidator with assets and growth platforms in Colombia, Ecuador, Chile, and Brazil. Founded in 2002, GeoPark has a track record that spans more than 2 decades of consistent growth, superior ESG performance, and delivering value to their shareholders. GeoPark is listed on the New York Stock Exchange, and here to tell us more is GeoPark's Chief Financial Officer, Veronica Davila.
Thank you, Laura. Thank you, everyone. Good morning. I'm Veronica Davila, as Laura mentioned, CFO for GeoPark, and I'm excited to be with all of you here today to give you a brief update on our company, to tell you what's exciting about our name, what we're up to, and to share with you, well, this is a great and unique opportunity to be looking into our company. And this works. Wonderful. GeoPark is a leading independent E&P focused in the right hydrocarbon province, Latin America, a resource-rich region that has been underexplored and underexploited, being dominated by the NOCs traditionally, with very little independence, which leaves ample room for companies such as ourselves to thrive. Our company creates value. It creates value on very basic premises. We invest our capital and apply our science to great assets, both on the exploration front and also by low-cost operation. We have discovered 430 million barrels of 2P reserves in a 20-year track record, and are standing today at 1.8 billion 2P NPV. What is more, we run a solid and profitable business, a business that is based on low break-evens of our assets, with 95% of our production breaking even between $20 and $30 Brent, and with consistent cash generation, generating cash that is 2 to 4 times every dollar of capital we invest across the price cycles. Oh, sorry, too early. But none of this would be possible without the proper alignment. We are properly focused and aligning ourselves with our surroundings, our planet, with the people that live around our operations, all of our neighbors, and with our employees, the women and men that work hard every day to make us the great company that we are. And lastly, we're a consolidator. We work hard on upgrading and expanding our portfolio by bringing in those great assets that fit our footprint in a disciplined manner, but in a creative way, finding the transactions that will make those assets come into our portfolio. So let me first speak to our assets, to our acreage position across the right basins. For those who know us, Llanos 34 is our world-class asset. You could call it our mothership as well. This is our asset that we brought from 0 production and 0 reserves to producing today 55,000 barrels of oil per day gross and 88 million barrels of 2P that's net to ourselves. We hold 45% working interest of the asset and the operatorship. It's an asset where we worked really hard and found and pushed the limit. We're now 13 oil fields discovered, about 160 gross million barrels produced to date. And with 2 of the fields on the asset, Tigana and Jacana, ranking today within the top 10 oil-producing fields in Colombia. What is more, This asset boasts one of those low break-evens that I mentioned, between $20 and $25 a barrel, and is also very competitive in terms of its emissions, at 9.7 kilograms of CO2 equivalent per BOE of intensity. As I mentioned, this is an asset that we worked now for a little bit over 10 years. It seems it goes fast, right? And we have been able to apply new techniques, new technologies, and this is one that I wanted to share with you. This year, we started horizontal drilling in the asset. And it started as a pilot, something new, something that we do as the asset matures. And we were really successful. Our first horizontal well was drilled on budget, on time, and started flowing at 3,000 barrels per day. It had a 1,200 feet lateral and was drilled with a total cost of almost $11 million. And we saw the result, we saw that success, and we built on it. We quickly pivoted the plan and are targeting to drill between 6 and 8 of these wells this year. We've completed the second one already with very good results, and we're now on to the third one. This is to give you a little bit of the GeoPark way. We learn something, we do it efficiently, and we accelerate it. I should mention these wells target the Mirador Formation within the block, with about 100 million barrels of original oil in place. And as we move forward, we will look, to implement this horizontal drilling either in other formations in the same block or also in other assets or blocks for the company. Second, CPO-5, an asset that we got back in 2019, and where we're looking to expand the potential. The asset is producing about 18,000 barrels of oil equivalent per day. Here, the cost element is really standing out, about $10 per barrel of break-even, and a path of growth. You can see at the bottom side of the charts. It's twofold in terms of its double this production and also significantly increase its reserves in the 3 years that we've been operating it. We have it, sorry. We have 30% stake and we don't have the operation. Moving on, what we call all of the, Llanos exploration assets. The assets that surround Llanos 34. You see the area with the more, dark green in the center. That's Llanos 34. CPO-5 just south of that. And then all of the acreage that we got in the 2019 bidding rounds in Colombia. Those blocks we've been working on really hard. They hold 20 times the acreage of Llanos 34. Gives us a runway of opportunities, and we already started turning those grays into greens. Up at the top of the map, Llanos 87 is already producing. Just last week, we announced our first discovery on Llanos 123 block. That's on the left-hand side of Llanos 34. Saltador 1 well that is producing 900 barrels of oil per day. And we continue to work on these assets in the second half of the year. We have an exciting and catalyst-filled program with 1 to 2 wells in Llanos 124, an additional well in Llanos 87, an exploration well in CPO-5, which I mentioned before, to try to test the continuation of the Jacana field from Llanos 34, and also thinking about the next layer, the next stage, will be shooting seismic on the 2 blocks all the way to the right, Llanos 104 and Llanos 86. This will be 650 square kilometers of seismic, one of the 3rd largest seismics onshore in Colombia. It will help us, replenish and expand our exploration portfolio. And lastly, as we go through the assets, let me move south towards the south of Colombia and the northern part of Ecuador, Putumayo and Ecuador assets. Few things here, right? We got the Putumayo assets from the Amerisur acquisition in 2019, and we're building on the Platanillo block, which is performing at top capacity this year, 95% production efficiency, the right infrastructure in place. And we're building on that to be able to develop the exploration potential around it on the other blocks that you see in gray, starting by Putumayo 8, that will be first in line. And then to the south of that, the 2 blocks across the border in Ecuador, right? Producing today 1,200 barrels of oil per day. This is without including another discovery that we had just last week with the Jin 2 well that is testing 1,200 barrels of oil per day, light oil, and that is ready to go in production, right? We have the right infrastructure in place here to be able to move. I would highlight from Ecuador, we entered again in 2019 as the bidding rounds, and we were the first ones, alongside with our joint venture partner, to discover from the Intra-Campus 1 bid rounds. And we had 4 discoveries, and we're going for more. I spoke about creating value, right? Investing our capital and applying our science. You see here a few data points. I want to be short because people get very tired. But at the top you see how we've been able to increase our production, keep our production growing, while at the same time at the bottom of that chart, reducing our cost. And of course I mentioned already our very low break-evens. And I would highlight, we have 10 rigs in operation today, 6 drilling, 4 workovers, and there's 2 additional coming in the second half of the year full of activity. Our cost and capital efficiency, I mentioned at the beginning, and here you can see the data supporting that statement, right? 2 to 4 times cash generation for every dollar of capital invested. Going to free cash flow here, we expect $90 to $120 million of free cash flow generation for 2023. This includes, of course, our capital expenditure program, which ranges from $180 to $200 million for the year, and of course, cash G&G, taxes, and the rest. And what do we plan to do with that cash flow generation? We are looking to return significantly part of that to our shareholders. Back last November, we came out to the market and we said we're going to return 40 to 50% of our cash flow generation to our shareholders. We're well on our way. I'll give you the date in just a minute. And we plan to deliver on those plans. Quickly through the balance sheet, we hold $86 million worth of cash at the end of the second quarter. We have a very strong, clean balance sheet with a $500 million bond that matures in 2027. It has a 5.5% coupon. It is a beauty in today's date and time. And then, our net leverage position is very comfortable, below 1. And we've recently secured an $80 million, unsecured committed credit line. This is the type of facility that we have as safety nets to provide a little bit more robustness to our balance sheet. And that's why we went ahead with that transaction, as we've done in the past. Quickly through hedging, we have consistently hedged across the last few years. I think this is a part of providing safety net to our business. We use very simple instruments. We're currently using combinations of floors and ceilings or collars. 12 to 15 months into the future, 30 to 50% of production hedge target. And you can see the levels there, which provide, significant room to the upside. And here, I think I want to stop for a minute. You can see, as Lara mentioned at the beginning, we've been listed in the New York Stock Exchange since 2014. And we've been, consistently returning value to our shareholders. We've spent about $50 million worth of dividend, since we started the policy back in 2019, and currently run at $30 million a year, which equates to about 5.5 dividend yield. On the share buyback, which we already also have, we've spent almost $150 million to repurchase 18% of our shares outstanding. Of that, we've done $18 million just this year to date. Again, on that commitment to return 40 to 50% offer free cash flow generation to our shareholders. And I want to call your attention to the bottom of the page. I mentioned to you a unique opportunity of entry. And you can see our share is currently undervalued versus our 2p NAV, but even also undervalued against our 1p NAV per share. It is a time where it's unique for us to, come to you and for you to consider, our name. And you can see on the right side how, we're trading below our historical multiples. I mentioned alignment, right? The proper alignment with our planet, with our neighbors, with our communities, and that's based on speed, our integrated value system. Speed stands for safety, prosperity, employees, environment, and community development. And so safety goes first, always first for us. We base our safety on very simple but powerful tools that allow us to reduce incidents even as working hours increase. On the environment, we have very clear metrics and policies towards the reduction of our intensity, reducing our carbon footprint. Now, for the short, the medium, and the long term. We're well on our way. We reduced our emissions year on year in 2022 by 34%. We interconnected our main asset, Channel 34, to the grid, and we also installed a solar farm in our operations. And we focus on energy efficiencies. Not only production efficiencies, now energy efficiencies as well. But we want to go beyond, right? I mentioned here on the bottom side, you see circular economy, but we also worry about, water, biodiversity, all of the other initiatives. It's not just carbon. On the social side, I mentioned, right, our focus on our employees, the women and men that are shareholders of our company, all of them, and that are focused on taking us forward, and of course, the engagement with the communities, the people that live and surround our operations, which are key. It's key for us to be partners for a joint success. On governance, we hold really high standards with a majority independent board, but more importantly, a board that is diverse in backgrounds, in expertise, in experience, with a very strong technical focus that provides us diversity of thought and the proper stewardship for our business. And lastly, as a consolidator, I mentioned at the beginning, bringing in the right assets, expanding, enhancing our portfolio in a disciplined fashion. 2 quick notes here, because I think I'm running out of time. Channel 34, this asset that I spoke to you at the beginning, we got into this asset by paying $35 million for stakes in small companies where there were no production, no reserves, no well drilled. We got 45% of the ownership and the operatorship in this transaction. And the value creation speaks for itself. We've generated net cash flows in these last 10 years of $1.8 billion, and still the 2p NPV of the asset is at $2.2 billion. That's all before tax. So we successfully went into the asset, introduced a new play type, and multiplied the value. That's what I mean when I speak about our ability as a consolidator. And second to this, it's CPO5 acquisition. And here I want to make the point on the creativity. We wanted this asset. We went for this asset. We were looking at different ways of finding it. When a Medisur corporate deal came to the market, then we entered through a corporate transaction. And again, we've been able to increase reserves, increase production, and this asset has a long way to go. And lastly, to round up on how we look at this, I think there's 2 points I would like to make. One, look at the bottom map. That's the Gulf of Mexico, and you see at the top full of little dots, right? Those are all the wells, all of the activity. And then there's the border, and then there's nothing. Geology doesn't know borders, right? That's the potential of Latin America. That's the potential of the region where we operate, where there's all of this that can be done because it hasn't been tackled before. And so we look, as you can see on the map on the right, we look at all the basins, regardless of borders, with geology first, looking for the best assets, And then with the proper value alignment, achieve scale with value, production and reserves that have upside. With the best economics, it needs to compete with the assets in our portfolio, and you already saw it. And with a balanced portfolio that can give us, diversity in terms of place, basins, countries, and fluid types. And so we're at a very interesting juncture in a company, as I mentioned, full of activity ahead of us, plenty of opportunity, and a valuation point that is really attractive from an investor perspective. And so with that, I would like to thank you for your time, and hope we can either catch up during the conference or meet during the breakout sessions that will start shortly. Thank you.